Hi, everyone. Seven Investing founder Simon Erickson here, and we are talking this afternoon about robotics. There is truly a rise of the robots across the entire world. They're seeing robotics and automation start to change fundamentally a whole variety of different industries, and this could have some big implications for investors. I'm joined this afternoon by Bill Studebaker. He's the President and Chief Investment Officer of ROBO Global. ROBO Global is a financial services company that was the first entity to define robotics and automation as a unique and investable class and has created the first index to track and monitor all companies on a global basis. Bill, thanks very much for joining me here this afternoon.
Thanks, Simon. Good to be here.
Bill, we've spoken before, and last time we spoke, you mentioned that robotics is not necessarily a niche, but a foundational technology that's being applied across industries. So this is something that's disrupting a whole bunch of different markets out there. I want to talk about a couple of those markets first, and then start talking a little bit higher level. But one that we're probably all familiar with is robotics and automation for warehousing and e-commerce. And we kind of think about Amazon having these Kiva robots going through its warehouses to pick up items. What are your expectations for e-commerce going forward? And is robotics being used in that field just the new normal globally?
Yeah, well, that's a good question, Simon. I guess when you look at e-commerce and warehouse automation technologies, they are enabling global populations to adhere to social distancing and self-isolation mandates. And while e-commerce was probably a luxury in the past, it has now been catapulted into a new reality and a necessity. And as a result, growth in this area is only expected to accelerate. If you're in e-commerce retailer, it's not about the cost of product, it's about the speed of fulfillment. You order from Amazon not because you want the product in a week or in days, you want it soon to be inside of hours. That only comes with automation. And with automation, guess what comes? More demand. So Amazon and a slew of other retailers are adding significantly more people to their payrolls on a temporary and probably likely to be transitioning on a full-time basis because they need them. We just don't have enough people to do it. So Amazon's adding 100,000, and since they bought Kiva Systems, roughly, I guess it was in 2012-ish, they have added upwards of 175,000 people despite adding 100,000 robots. So robots haven't stole our jobs. They've actually created more demand. And so we think that's the market. I mean, last year, warehouse and automation topped $53 billion as a market. We think it's going to exceed in excess of $80 billion by 2023. And the last anecdote I would say, by 2023, it's expected that e-commerce globally is going to be a $6.5 trillion market. So I think that's what we're seeing.
Yeah, and Amazon has really set the bar for everyone else now too, right? The 2-day shipping, like you said, the benefits of Prime. If you're not offering those and you're also an e-commerce company out there, you're kind of behind the expectation that consumers have for everyone.
Yeah, that's exactly right. I mean, clearly, we're having to see everyone step up their game. And if you're a bricks and mortar retailer, you have to use AI to optimize or manage your business better, right? So let's just say that you're a retailer in Santa Monica and it's 80 degrees and you're selling bathing suits. Is it better to sell your bathing suit at $59.99 or $29.99? Okay, recognizing what the weather patterns are like. Should I have more SKUs or less SKUs? Only AI can kind of help optimize this by understanding the SKUs that you have, the weather patterns, and past purchasing behavior and things to help optimize. So really, robotics and AI are tools to help improve productivity and optimize your cost structure and find new ways of growth. I mean, if we're going to come out of this, enormous economic distraction that we're in right now, we're going to need these tools to help manage our business and our lives.
And allow me to shift gears here for a minute, Bill, and pardon the pun on this one, but let's talk about the automotive industry. This is an industry that's kind of traditionally been a little bit more incremental, a little bit more conservative, high focus on models and brands and safety and things like that. And then we've got companies like Tesla that are using the car as a vehicle for software. And they're trying to automate, of course, as much of that as possible through autonomous driving.
Mm-hmm.
Two questions for you. First of all, is Robo Global investing in the automotive space? And two, what are your thoughts on Elon Musk and Tesla?
Okay, well, I guess the first question, we're not investing directly in the auto industry, but we're investing in technologies that will enable autonomous vehicle development. So computing, processing, AI are 22% of our index. So we're investing in companies that, again, they're enabling this. So companies like, NVIDIA that many are aware of, or companies like Xilinx and Microchip, and chip design companies like, Cadence, and lesser known companies like Ambarella that is in video processing that's slowly moving into computer vision technologies for the auto industry. And so there is actually a pretty big ecosystem of companies that are enabling, that to happen. But auto is the largest utilizer of factory automation. If you look at the penetration rate globally, it's around 40-45% penetrated. So still obviously not 100% penetrated. And that is a big end market. So for us, it's roughly around 35% of our factory automation exposure comes from auto. And, with auto being down, that is a little bit of a headwind that we have to absorb. But fortunately, if you look at consumer electronics, which is the second biggest category of factory automation, that is on fire, right? So that's, we're having to live at home, and we're having to deal with improving our mobility. So people are having to upgrade and buy new computers and different electronics to help enable their lives. So that business is actually picked up, and we sort of see that almost equalizing itself. So we think there's still a lot of growth in the years to come. In terms of Tesla, it's only my personal opinion, because we're not invested in Tesla. They do have a moat around their business and having a first mover advantage in this technology, and they are generating tremendous amount of data. And you really can't count Elon Musk out. He's a tremendous visionary. But I do have a little bit of reservations in that the auto industry collectively is investing somewhere in the neighborhood of $90 billion in EV technologies. And at the end of the day, I'm not sure if people are going to really value this as an auto company, or if they're going to value it as a quote unquote technology company, as you talked about. I guess, time will tell. I would say that, at this price, I think the risk reward is probably somewhat evenly balanced, not to suggest that there is, exponential downside, but there's been a lot of good news priced in the stock, I think. That's my personal opinion.
Yeah, makes sense. I'm glad you mentioned the index a little bit, and some of those components of the index that you have. Companies like NVIDIA, like Xilinx, those are familiar to investors because they've been phenomenal investments. They've been phenomenal stocks for investors to buy and hold for years now. And we kind of think of those, sometimes we kind of call those the picks and shovels, the technology providers that others are actually adopting. And in looking through the index that you've created, Bill, I've seen a lot of others that are less familiar names, especially internationally, these same types of technology providers that are serving other industries. Can you tell me a little bit about how you create the index, how you pick companies that go into it, how you figure out the allocations, and kind of what you look for when you're picking the components for this?
Okay, so the first and foremost is that we were the first company ever to have created an index that tracks what we believe was the inevitable growth in robotics and AI. So think back 7 years ago, it didn't exist. We want to invest in robotics and AI, but there weren't any dedicated mutual funds doing this, hedge funds, et cetera. So we actually had to create kind of an S&P or MSCI for this. So we either define a company as a technology or an application. So what makes a technology work? That's the computing, the AI, the processing, sensing, actuation, integration. And then the use cases, where is robotics being deployed? Well, into everywhere from industrial manufacturing, as we know about, into warehouse automation, into healthcare, ag, food, security surveillance, consumer energy, and it's growing as the use cases are growing. So to get in the index, a company has to fit within one of our 11 sectors. And then we're looking for companies that have high revenue purity. Okay, we actually only have 2 position weights. It's a revenue weighted index, very different than most traditional indices, which are market cap weighted. And that tends to being market cap weighted, you tend to invest in yesterday's winners, whereas we're trying to invest in tomorrow's winners. Okay, and so we have 2 position weights. We have what we call pure play technology companies. We call them bellwethers. That's 40% of the portfolio has a 2% weight. Okay, the other 60% are emerging technologies. We call them non-bellwether. Each has a 1% weight. Okay, and we rebalance it quarterly to smooth out the ride. And again, we're looking for companies that have high revenue purity. I'm agnostic to where the company is based, whether it's in the US or Germany or Korea or Japan, et cetera. We're trying to find the companies that have the high revenue purity. And then also we think have very strong technological leadership. Man, I wish there was an AI button that I could hit and have a computer just tell me, what's the guaranteed, bet or company to invest in. We do a lot of rigorous fundamental analysis, and we employ 7 PhDs on our team that some about, Simon, and hopefully your viewers could take a look. Our website's at roboglobal.com to get insight on our team. But our 7 PhDs really have helped create the industry. They've built technologies. They are key confidants to CEOs, globally, and amazing entrepreneurs. And I think these people give us, along with our own research, tremendous insight into where the world's going. Okay, and so right now, as it stands, roughly around 45% of our index is North America, and 55% is international. Again, not by design. This is bottoms up, having to do with the technology, comes from. And this is very much a global phenomenon. So to get access to this, you really want to play it globally and not try to pick the sectors or the geographies or even right now the obvious companies that might be what you believe are the obvious winners. So we think this is a better risk-adjusted way to extract that.
Yeah, and you said you're agnostic to the location of the companies. You're looking for revenue growth. Was that what it was that you're determining for the allocations?
We're looking for companies that have high revenue purity. I mean, it's important to us. And we're very prudent about valuation too. If you look at the median GP of our companies on a trailing 12-month basis, our index trades around 19 to 20 times earnings. Versus the historical, which is around 24 times. Again, this is earnings, not revenues. And for those that are heavily invested in technology, it's nice to hear the word earnings because a lot of companies are valued, on revenues. And so I think there's a good amount of cushion, not to mention 60% of our index has a net cash position and no debt. And we think that is a really important asset. As we're entering, this new sort of market cycle, companies that need cash are going to be in trouble. There's going to be a lot of companies that are going to go out of business that are going to need government support. If you invest in companies that are getting government support, I think you're going to find that might be a difficult experience as an equity owner going forward because there's going to be a lot of shackles on those companies in terms of their ability to buy back stock, what they can do in terms of pricing and margins. And so I would just be, cognizant of that. The S&P, as an example, has roughly about 14% of the constituents have a net cash position. So again, that compares to ours of 60. And on our healthcare index, it's also a similar level of cash to roughly around 60% as well. So well positioned to weather the storm.
Yeah, it sounds like a nice balance of getting the revenue growth and the upside, but also being conservative too and responsible, looking for companies with a net cash position and with earnings. Let's talk about that healthcare index a little bit, Bill. We've talked before about robotic surgery. We're familiar with companies like Intuitive Surgical. We're starting to see a new movement towards telehealth, where you can do consultations with doctors from your home rather than going to the hospital. What are the things that are getting you excited about the healthcare industry right now?
Healthcare might be the most exciting area that robotics and AI is going to change. If you think about healthcare, 20% of our GDP is spent on healthcare. That's unsustainable. It's actually not healthcare, it's sick care. And this is happening really globally. And so this is an industry that's going to go through an enormous wave of digitization, going from an analog industry to a digital. And this is going to happen, globally. And I think if you look at people that are born now, kids now will not live until they're 60 or 70, try 100, try 120 plus. Why? Because we've got the ability to not just arrest the signs of aging, but in many cases begin to reverse it. And you look at most healthcare funds or indices, they tend to look at healthcare as treating something after it happens, right? So you go and get a disease, so let's just try to go and stop it or arrest it, but wouldn't it be better to predict and prevent it, right? So we're looking at investing in the future of healthcare, which is everything from diagnostics to robotics to process automation to genomics to telehealth to precision medicine, data analytics, and regenerative medicine. This is the future of healthcare, okay? If you look at the S&P healthcare index as an example, we would only have around 30% overlap with that index. So many of our companies are not in most global indices, and I think we're gonna have tremendous growth. I mean, again, I think there's going to be trillions of dollars of economic value that are going to be up for grabs in the years ahead as we begin to cut costs, manage illness, eliminate illness, right? You've seen already right now that as a result of the virus, I mean, AI has been on the ground floor helping to, guess what, sequence the coronavirus to be able to figure out where it's come from. You can't do anything unless you can sequence it, you can understand it to then be able to develop, therapies. Companies like Moderna that some of your listeners may have heard about, it's an amazing company that was the first company to begin human trials for a new drug or therapy after only 42 days. Okay, that would have been
amazing,
unheard of years ago. And so they have 11 programs in clinical trials and a total of 20 development candidates. So it's not a one-trick pony. They just happen to be kind of first to the show. And so, regenerative medicine, I think is really exciting. Genomics is really exciting. There's other companies that are doing, telehealth. A lot of your listeners or subscribers would know about Teladoc. Teladoc has gone from basically, the outhouse to the penthouse in literally a couple of weeks as a result of the pandemic. I mean, telemedicine has exploded in its use and applications. It took Teladoc 10 years to get to 1 million virtual care visits. Last quarter alone, they had 1 million virtual care visits, and I'll be interested to see what their virtual care visits are in the upcoming quarter. As of, I think it was March 12th, we had a look at what their business was doing, and their televisits were up 50% on a year-over-year basis. There are other companies globally that are doing this. We have another company in our healthcare index, H-Tech, which you can look at. It's on the NYSE. Ping An is based in Hong Kong. It is a Chinese company that was spun out of an insurance company, Ping An Health and Technology. And Simon, this is a company that does 650,000 virtual care visits per day. Not per week, not per quarter, not per year, per day. Okay, Ping An is going to do 250 million virtual care visits per year. So if I'm to guess, in 3 to 5 years, telehealth will be, upwards of serving 1 billion virtual care visits per day. So as a result of the pandemic, we have, we're institutionalizing new business ways that you could have never predicted. And new businesses are emerging almost overnight as a result of this pandemic. The shift to more mobility, is happening. And so when you look at, companies that are doing, monitoring, we have another company in our index called Livongo, and they provide AI-driven solutions to employees to help them manage chronic illness. And their flagship service provides people with diabetes with everything they need, from strips to live, consultants. And they've expanded into other therapeutic areas. So there's going to be a lot more monitoring. And this is all happening because performance capabilities of computing have skyrocketed and the cost of computing have plummeted. This has created an array of use cases that a couple years ago was Elon Musk science fiction. So I think that as well as there are people that, that have doom and gloom. This is the fun of working at home.
Yes, that's right. Changes it for all of us.
But I lost my thought.
Elon Musk, it was Elon Musk a couple of years ago. Now it's something, it sounds like it's much more broader based in the market for healthcare.
Yeah, again, I just think that we're in the early days, and there's a lot of stress in the market. And robotics and AI years ago might not have been an investable theme 6, 7, 8 years ago. Well, robotics and AI is an immensely important industry to track and follow. And I think this is the future of where the world's going. And I think if you're investing in the past, that's investing in the zombies. I think you want to be investing in the future, which is investing in the robots and AI. And Sundar Pichai sort of categorically talked about it on his conference call last quarter, where he talked about AI, being the most important technology of our lifetime. And so I think if you look at the FANG companies, they're all embracing these technologies and using them to help, manage their business. And they're doing it better than 99% of other companies.
It's an interesting thing to think about, Bill, because you mentioned Sundar, but then you also think about Sergey Brin, co-founder of Google, who spoke to the World Economic Forum and said that he missed how fast AI was going to happen. The co-founder of Google going out there and saying that it surprised him how quickly things picked up out there. What is it in everything that you see with AI and robotics and everything that you look at on a daily basis? What is it that surprises you right now in the progress that's being made in AI?
Well, I think first of all, the important thing to recognize about AI, it's about optimizing. It is about the notion of general AI that Elon Musk talks about, robots stealing our jobs and taking us and being able to do everything, is, in my personal opinion, nonsense. AI is trying to attack and automate a specific task. And so I think we shouldn't lose focus on that. That's actually what's happening, because, when you think about AI development is always based on learning and data. And the AI system, has learned from prior experience by humans and machines. Therefore, it's good at mimicking good decision making, but it doesn't always demonstrate innovation. So, put it in front of a new situation and it's missing human intuition. So humans have this ability to do lateral thinking and then apply their wisdom and intuition to a whole new situation. So I think we need to think about, that. And within every AI application, it's attacking a different problem. It's also attacking a different industry. The AI, solution that you're applying at a certain company in healthcare may be focused on trying to cut costs, and another one might be trying to optimize, growth. Another one could be used to, help improve quality assurance. And there's just a lot of things that AI can do better than people. Imagine. We have a company in Index called Kuyang. They have an amazing 3D sensing technology. So imagine you have a cell phone, going down a production line, okay? And that goes out. Well, if you have a human being looking at the circuit board, they're probably going to have a difficult time understanding, is that a well manufactured assembled board? Okay, so in this case, Kuyung does 3D imaging where it looks at hundreds of images, thousands of images of a perfectly assembled circuit board. So when it comes out, it's perfectly assembled. The last thing Apple wants is to have a phone come back to you with a disgruntled purchaser that bought a product that doesn't work. And so there are many cases where AI is now going to be rolled out to all parts of manufacturing for quality assurance. And in many cases, robotics and AI can do it faster than people. And that doesn't mean replace everyone. It just means we're optimizing. And I know that we all, worried about, job losses and things like that. The fact of the matter is that some of the jobs, should be automated. Okay. When you look at the apple picker as an example, it's not a very glorified job. I don't think many of us wake up or graduate from college and say, I'm going to go, pick apples for a living. The fact of the matter is a apple, it takes a person roughly 7 to 8 seconds to pick an apple, whereas a robot can do it inside of a second. And it also can do it by using AI to help determine, is that apple ripe? And it can look at this and to tell this 24/7, 365 days a year in the sun or in the dark. And so again, it's really about optimizing.
Yeah, and I guess, Bill, with everything that you're seeing, we talked about healthcare, we talked about optimizing, we talked about apple picking, automation, automotive, everything that you look at. And I know you've been doing this for at least a decade, looking at robotics and AI out there. Are there pockets of where you see the progress being made right now in AI that it just surprises you, that you just think that you've hit that inflection point of things really happening really quickly right now that's really, really catching your interest? Is there anything like that that's standing out on your radar?
Well, it's kind of touching all areas. Again, if you look at the industries that are exploding, I mean, it's happening in warehouse, automation. There is going to be a massive array of new bin picking technologies that are to come out. I mean, humans, are good at doing unstructured work. Robots have not been very good at doing unstructured work. And so there's a lot of new grasping technologies, that are coming out. When you look at in healthcare, it's robotics and AI helping work alongside of doctors to make better decisions. Okay. So it's not about eliminating the doctor. It's about helping augment their decision-making. And when you look at and maybe an oncologist that might see, hundreds of, well, maybe 100 MRIs a day. I mean, they have a certain capacity of number of MRIs that they could see or X-rays. Well, a robot or AI can see hundreds and thousands of those a day. And so we're not capacity constrained. A robot or AI is good at looking at hundreds and thousands and maybe millions of images of what might be a malignant cancer cell or a benign, and being able to tell that. And to be able to work alongside of a doctor to come to good clinical decisions. I don't think any of us want a quote unquote AI or a robot making decisions for us. We want that done in consultation, with a doctor. So again, I just think that we're in such early use cases of this, and this is going to go on for years, if not really decades and centuries. We're at the forefront of one of the greatest technological shifts that humanity has ever seen. Obviously, it's been a little bit obfuscated by what's going on because of the economic considerations with the virus, which obviously are important to take precedent. But these are the technologies that are going to help us, get out of this.
Yeah, and one final question for you. Our viewers here at Seven Investing, we're individual investors. We're very interested in robotics and AI. What are a couple of things that you think that we should be keeping an eye on? Is it processor power? Is it the reduction in costs of robots? What are some of the things that you look at to determine how things are really going out there in the robotics and AI field?
Well, I think that's it. I mean, what's important for a lot of your viewers to appreciate is that when you think back to 7, 8, 9, 10, 15, 20 years ago, robotics and AI had been around. But what happened historically was that people would work on a technology, and let's say that you were Stanford and got $100,000 for a robot to clean your table. Well, it would probably start working on it, and guess what would happen? They would run out of money. So all the technology that was learned basically collapsed, and it never scaled. And now with open architecture like robot operating systems, this is shared knowledge. So it's very easy for people to now start up technologies. And so the growth is really not any linear anymore. It's becoming exponential. So, we're doubling our processing power or computing every 18 months, and our cost of computing is plummeting. So again, we're institutionalizing new ways of working. And I think, this crisis is going to kind of help prioritize tomorrow's tech transformation. So, we know that we've already accelerated the need for network capacity and bandwidth. So the shift to remote work, doing virtual classes and video conferencing has only increased the demand for greater capacity, and the move to 5G. So I think your viewers should be very, focused, and your subscribers, that we're going to see even a stronger shift, into 5G, and cloud providers and infrastructure companies that enable AI and advanced analytics are seeing a notable increase in demand for data center build-outs. So data center build-outs, are going to continue to happen. And so that would be a couple things I would just, kind of watch. I wouldn't expect to see autonomous vehicles, happen, next week. And so I think really what the forefront of where we are is really, again, with warehouse automation and healthcare technologies are taking center stage right now. And I would be very focused on those areas.
Well, once again, Bill Studebaker is the President and Chief Investment Officer of ROBO Global. He is structuring the indexes behind two publicly tradable ETFs. One is ROBO, that's ROBO, which is focusing on robotics. Another one focusing on healthcare, HTEC. They've also got a third one available internationally that focuses on artificial intelligence. Bill, thanks very much for the time with 7 Investing this afternoon.
Thanks, Simon. Good to be here.
And we are here empowering you to invest in your future. We are 7 Investing.